we're loving the pictures that you're clicking at the photo booth and posting. So please do continue to post those pictures using our hashtag ET Women in Tech. I'd also like to request all our delegates to please keep tweeting on our Twitter wall in the lobby area. I'd also like to welcome all of you to please join us in the experience zone. We have a lot in store for you right there as we get all set for our next session on leveraging machine learning and web analytics to build innovation digital strategies. A very warm welcome to Ms. Manisha Banthia, Director Data Analytics, Fiserv.
Thank you, Isha. It's an honor to be in the midst of so many women leaders who have been transformational in their space. I started on my analytics journey more than 2 decades back, and I feel very lucky to have started, in this space because this field has grown tremendously over the last few decades. And I have had the experience of working on a variety of use cases and have seen this space grow from just being very data focused to becoming very insight focused. Right. So it's been a great journey, and happy to see a lot of women employees, women associates in this place as well. At Fiserv, our use cases are focused on in the banking industry. So we look at different business units within Fiserv. It could be cards, it could be debit and credit cards, it could be payments, it could be merchants, it could be, banking. So there are a variety of business units that we work with, each one having, its own specific business strategy to resolve. Today's theme is about digital transformation, and keeping in line with that theme, I will be talking about how you could leverage analytics to increase digital engagement. It is not just about making a better app or creating a faster performing app, but also about how to engage your users with it. So with the lockdown, we saw a lot of changes in this space. We saw customers interact digitally with their banks. We also saw them interacting not just with banks, but also with digital payment providers. And the reasons, that they moved to digital payment providers were because they were low cost, because they offered ease of use. There was a faster service, and it was also more personalized. As they continued to work on it, they also found it to be personalized. And these are research. What you see on the screen are really research outputs of various, organizations. And it just shows that the digital adoption is here to stay, but also to retain your customers on those digital channels. We may have acquired them during the lockdown, but it is very important to continuously engage them and make sure they don't go back and withdraw money from the ATM or deposit a check on the ATM, as they continue to interact with your apps and they don't find it convenient to do so. So there are many things that we could do, to make sure that we make our customers comfortable using our channels for various activities. And we have seen, there are activities that customers are comfortable doing at the branch or at the ATM. There are some activities that they are, getting to become comfortable on internet banking or on the mobile app. And largely we've seen, opening an account or specifically a loan account and going for investment advice or making a deposit, withdrawing money. All of these usually are easier done at the branch, and ATM proximity is still an important factor when somebody decides their primary bank. So there are things like that still exist. People are doing, payment of bills, they're transferring funds, opening a term deposit, applying for a credit card, maybe on digital channels. And then there is a part of the population which is still doing non-financial activities, like viewing a balance, requesting a statement, requesting a checkbook on the app and so on. And we need to turn this around. We need to, just not make our mobile or internet banking just an inquiry thing, but an actual financial transaction based interaction, right? uh, so to retain digital as a primary channel, we need to make this change happen gradually for certain sections of the population, and for certain sections they've like millennials maybe have already adopted those channels. So we are good, but we need to retain them. So if we translate this now into a digital analytics life cycle, normally we will see we start at the stage of adoption, which usually starts by somebody logging into your registering on your website, or downloading your app, and they may do so, but do they really become active? As in, do they do that only to basically get an offer that you may be giving them on the website? They just sign up for it and then they don't interact with it any further, or do they actually become transaction active? Similarly, once they become active, when they cross that line, right, from actually becoming active, how do you really increase usage? How do you make sure they come back? How do you make sure that they do more transactions with you? They're comfortable doing more transactions with you, and as they do more transactions, are they also doing different types of transactions with you? Are they, so which is what we call feature growth? Are they registering for a biller once and just paying their bill payment once for that biller, or are they now scheduling those bill payment transactions? Are they adding more billers? So things like that are part of feature growth. We are also seeing, at this stage, you keep coming across things like, you could sell a credit card. You could, you could make them apply for a loan at this stage as well. So are you able to sell new products to your customers as they become active users of digital channels? And finally, it gets to a stage of user retention. If your product features are not good, if they're not able to complete a transaction successfully or easily, then they might switch to other payment platforms, or may move to another bank's app for all right? So how do we make this journey successful? By doing different types of analytics. So the traditional analytics that we've done have been around segmentation and targeting. Pretty much applies here. You look at your customer base and you segment your customers based on their transaction behavior, based on their demographics. But what's new is you're also going to now start looking at metrics that you get from web and app, or from your internet banking, or from your app, mobile app tracking. So you could look at things like how often you come back, how often you log in, how much time you spend on the app, what things you click on, are you able to complete a transaction or not, at which stage of filling a form did you fall out? So things like that are very, very important to understand digital engagement and improve digital engagement. And finally, also things like using AI or natural language programming, text mining, to understand app feedback, comments, that they may have left behind, the FAQs that they're looking for, how what kind of support have people needed, what worked well for them, what did not work well for them. All of that is also very important to improve the user experience. So that's how we combine machine learning, we combine digital analytics, and then we also bring in text mining, etc., as a combination to improve digital engagement. So primarily, you will see in the initial part of it, you will see as you get to digital adoption, you will look at the traditional forms of data in terms of digital enrollment data of the past. People who have already registered, what kind of demographics or what kind of transactions do they normally do. You will look at the product holdings, you look at the demographics, you will look at what kind of rewards and offers have worked in the past. So things like that, campaign data, all of that is what you will collect to segment your customer base and score your customers for basically looking at the propensity to adopt digital channels. And then you could understand their migration patterns from past data, from campaign data, and create the business rules for you to adopt, to create your adoption strategy. So for a certain target group, which could be older customer segments, you could launch awareness campaigns for highly engaged customers who are probably high balance customers. Also, you could look at opening a term deposit or like a fixed deposit via internet banking. So things like that can be done for digital adoption, but it gets more complex when you get into digital segmentation for digital migration and retention. In this case, what we do is we look at the customer base, and based on the channel usage, we identify them as digitally active, digitally inactive, or absolutely non-digital. And then within digital active, what we do, the piece that you see here, the 35%, for example, you could break it further into non-fin active, people who are only logging in, customers who are only logging in for, inquiries or downloading a statement. People could be highly engaged, which means they do a lot of transactions and they interact with all the features that you offer. They could just be bill pay users for ease of use. They could have become, from digital, they could have become digital skeptical, in the sense that, they've had some bad experiences, or they became inactive because of, fraud, or they've started switching to competition. Or they could just be, a payment kind of, they're using your app only for payments, etc. So based on these segments that you create, again, for each segment, you could create strategies, to retain them based on their behavior. And you could also do things like switching, right? So you could have very specific targets of moving a non-fin active customer to a bill pay user. And from a bill pay user, you could make him a scheduled bill pay, or, if you register so many bills, or if you pay so many billers, you will be given a waiver of whatever 5% or whatever cashback, right? Offers that could be given to you. So that's how you start with. You segment your population. You then look at specifically the digital users, and then within the digital users, you start building strategies for migration and retention. Another important thing that you could do is, you could look at your digital and non-digital customers as a segment, and look at it like you traditionally do your segments of, loyalists, or high profitable, or, disinclined customers, or frequent users, frequent shoppers, etc. The segments that you normally create for your marketing programs, you could overlay that statistical segmentation with your digital customers who are behavior in terms of who are low engaged, medium engaged, or high engaged, basis a recency, frequency, monetary value analysis that you could do, a term that we borrow from the retail industry in banking, and overlay both these studies into a longitudinal study, and look at the behavior of digital, non-digital, the engaged and not so engaged customers in terms of a pre-digital behavior, pre-digital channel adoption period versus a post-digital channel adoption behavior. And if your studies show that there is increase in transaction, there is increase in product holding, you're buying more products, you're becoming more loyal, you're more engaged, that kind of shows you the success of your digital campaigns, right? And how intense, what is the level of intensity of your digital engagement. And then you could create your segment specific strategies, right, where you see where the lines are not really these graphs show still a lower trend. You could actually work on strategies to make the curve go up. So those are a few things where you could apply machine learning, you could apply statistics, right, to do the analysis. But now comes in all of the app tracking data, the web behavior data, in terms of the menu clicks, the homepage section clicks, the searches, the login frequency, how many funds transfers started, how many payments started, how many started but stopped in between. um, how many registrations, how many campaign clicks, at what stage of the form, like I said, earlier, were you able to not complete and come out of your payment or registration, process, or do you have which visitor uses what kind of technology, do they use, and which kind of operating system or which kind of device do they use, right? So lots of things that you can learn about your users, and also about your app, right, in terms of what features are working and what are features are not working. And then you tie all of this back into the traditional historical database that you have about your customers, and then you improve your product. You give UX feedback to your product teams. You give back campaign effectiveness metrics back to your marketing teams, and also what product features are people looking for, etc. Is something that you could add back to your digital channels, to improve your digital channel experience. So these are the new things that are coming in terms of more variables getting added to your model. And so like I said, these were the traditional sources of data that you had, but now you have the web banking and mobile app data as well. And that, if you further combine with second and third party data sources, as some of us have already started doing. We are buying industry data, or we are looking at DMP databases. We are looking at household information, spend patterns of similar groups of similar segments of customers. All of this, with a word of caution, though, that while on the right of the screen you see, while people are saying that they want to leverage AI to help manage their money better, or they are open to sharing personal information to get the relevant products, or they need automatic or more intelligent assistance in paying a bill, or analyzing my cash flows, how am I doing against my peers, and things like that. While people are opening up to such things, we do need to keep as practitioners, as leaders in this space, we do need to keep track of. We should be on the lookout for regulations. We should be on the lookout for enhancing our risk programs as well, and not just our marketing programs. So I will end on that note. Thank you.